The rise of employer-sponsored coverage. Some of the first evidence of compulsory health insurance in the United States was in 1915 through the Progressive Reform protecting workers against medical costs and sicknesses. In industrial America prior to this, within the Socialist and Progressive parties, health insurance and coverage was formed as not only an economic right for workers' health but also as an employer responsibility and liability. Health care was in this context centered in working class American and labor union. Employer-sponsored health insurance plans dramatically expanded as a direct result of wage controls imposed by the federal government during World War. The labor market was tight because of the increased demand for goods and decreased supply of workers. During the war, federal imposed wage and price control prohibited manufacturers and other employers from raising wages in order to attract workers. When the war, labor board declared that fringe benefits such as sick leave and health insurance did not count as wages for the purpose of wage control. Employers responded with significant increase offer of fringe benefits, especially health care coverage to attract workers. The tax dedication was later codified in the Revenue Act of 1954. President Harry Truman proposed a system of public health insurance in his November 19, 1945 address. He envisioned a national system that would be open to all Americans but would remain optional. Participants would pay monthly fees into the plan, which would cover the cost of any and all medical expenses that arose in a time of need. The government would pay for the cost of services rendered by any doctor who chose to join the program. In addition, the insurance plan would give cash to the policyholder to replace wages lost because of illness or injury. The proposal was quite popular with the public, but it was fiercely opposed by the Chamber of Commerce, the American Hospital Association, and the AMA, which denounced it as socialism. Foreseeing a long and costly political battle, many labor unions chose to campaign for employer-sponsored coverage, which they saw as a less desirable but more achievable goal. And as coverage expanded, the national insurance system lost political momentum and ultimately failed to pass using health care and other fringe benefits to attract the best employees. Private sector white-collar employers nationwide expanded the U.S. healthcare system. Public sector employers followed suit in an effort to compete. Between 1940 and 1916, the total number of people enrolled in health insurance plans grew sevenfold from 20 lakh 66,000 2 crore 6 lakh 62,000 to 1 crore 42 lakhs 14 crore 23 lakhs 34,000. And by 1958, 70% of Americans had some form of health coverage. By 1976, 85.9% of the employed population 7 to 64 years of age had hospital insurance, while 84.2% had surgical insurance. Care Mill Act still private insurance remained unaffordable or simply unavailable to many, including the poor, the unemployed, and the elderly. Before 1965, only half of seniors had health care coverage, and they paid the 3 times as much as younger adults while having lower income. Consequently, interest persisted in creating public health insurance for those left out of the private marketplace. The 1960 Care Mill Act provided matching funds to states assisting patients with their medical bill in the Care Mill Act. The Care Mill Act benefit to attract the best employees, private sector, white-collar employers nationwide, expanded the U.S. healthcare system. Public sector employers followed suit in an effort to compete between 1914 and 1916. The total numbers of people enrolled in health insurance plan grew sevenfold from 20 lakh 66,000 in 2 crore 66 lakh 2000 6 lakh 62,000 and 14 crore 23 lakh 34,000, and by 1958 75% of Americans had some form of health coverage. By 1967 85.9% of employed population 70 to 64 years of age had insurance, while 84.2 had surgical insurance. And between 1914 and 1916, total number of people enrolled in health insurance plans grew sevenfold. Early 1960s, Congress rejected a plan to subsidize private coverage for people with Social Security as unworkable, and an amendment to the Social Security Act, creating a policy-run alternative was proposed. Finally, President Lyndon B. Johnson signed the Medicare and Medicare programs into law in 1965. Medicare program into law in 1965, creating publicly run insurance for the elderly and the poor. Article 39. Medicare was later expanded to cover people with disabilities and stage renal disease and ALS. Star Risk Pool. Prior to the Patients Protection and the Affordable Care Act, effective from 2014, about 34 states offered guaranteed issuance risk pool, which enabled individuals who are medically uninsurable through private health insurance to purchase a state-sponsored health insurance plan, usually at higher cost, with high dedicated and possibly lifetime maximums. Plans varied greatly from state to state, both in their cost and benefits to consumers and in their method of funding and operations. The first such plan was implemented in 1976. Member of expenses at a single hospital, Wheeler Hospital. It is also the forerunner of today's Health Maintenance Organization (HMO). Health Maintenance Organization (HMO). In 1935, the decision was made by the Roosevelt administration not to include a large-scale health insurance program as part of the new Social Security program. The problem was not an attack by any organized opposition, such as the opposition from the American Medical Association that derailed Trump's and Truman's proposals in 1949. Instead, there was a lack of active popular congressional or interest group support. Roosevelt's strategy was to wait for a demand and a program to materialize, and then, if he thought it popular enough, to throw his support behind it. His Committee on Economic Security (CES) Committee on Economic Security deliberately limited the health segment of Social Security to the expansion of medical care and facilities. It considered unemployment insurance to be the major priority. Roosevelt assured the medical community that medicine would be kept out of politics. जब कोई man से his suicide succeeded in pacifying the opponents without discouraging the reforms, the right movements never come for him to reintroduce the topic. Article 2829 and association that derailed Roosevelt's strategy was to wait for a demand, and a association that derailed Trump's proposal in 1949. Instead, there was a lack of active popular congressional or interest group support.